My name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify the sometimes confusing world of cross-border taxation for private clients. And today we have the honor and the privilege of having a conversation with the one, the only Leonardo Marquez dos Santos. Leonardo, please, could you introduce yourself?
Thank you very much for having me, Darren. I'm a tax lawyer based in Portugal, partner of Miranda & Associates, also tax law and international tax law professor here at Portuguese Catholic University. That's it.
Wonderful. Someone is moving to Portugal before you make the concrete step and you trigger tax residency. If I can borrow what you said previously, so basically you take your structure to someone who understands the Portugal system, and they're looking for things that won't fit. So for example, as you said, a trust, it's a civil law jurisdiction, a trust won't be interpreted in the same way that it is outside. And if, as you said, I mean, I believe there were like over 100 jurisdictions, in that list of the Portugal list of the non-cooperative jurisdictions. If it is that your structure includes any of those jurisdictions, you may need to reconsider it or at least understand the impact that would be had now that you are in Portugal, or any of the kids or anybody who's supposed to benefit from that structure. There would be implications to consider. What else? What else do you typically have in your conversation with clients who intend to move to Portugal?
Well, one thing I like to understand is what is a reasonable amount of tax for them. Because for some jurisdictions to pay the standard 28% tax on dividend distribution that we have is pretty good. For some others, that's a huge chunk and they don't want to pay it. So I like to say what I would say that most clients are willing to pay some tax, but there is an optimal level in their opinion that they are willing to do. So this is important to see how to deal with that, because I mean sometimes you just have to let's start with the end. I like to be analytical in this. So the worst thing you can do is receive money under the form of employment income. That's the worst you can do. So why? Because tax rates are progressive and very high, because high rates are achieved in a relatively low amount, right? And second, you have social security. So this is something to avoid. Okay?
Yes.
A lot of board members and people that have employment income. Well, let's see how it works. Also, employment income will create a whole lot of liabilities of dual residency. That's because if they're managers, sometimes there is the permanent establishment issue that is very, very big, especially if you don't have an employment agreement, but you're a contractor or something like that. So along the lines of the transparency issues that we were talking in the beginning, there is also the P issue and the home office issue. So this is something that we need to address immediately, because taxation is huge and risks are also huge. So first, so what is the best fit from a Portuguese standpoint? Well, if you have the NHR, the best is to have dividends or interest from underlying debt, from products that are flowing from a product with an underlying debt. So it qualifies as dividends for the purposes of the tax treaty. This is the best. There's no taxation in Portugal, there's no social security, and the withholding tax should be low. So if you have those, it's fine. If you don't have those, then we are going to have to tread lightly. Why is that? Because the word requalification is something that we should keep away. We should requalify dividend, we should requalify income, because we may be under an anti-avoidance provision. I mean, there is DAC 6, there's a lot of issues that deal with requalification. But even if you don't requalify, sometimes, not at all, so I'll just push that away. But sometimes if you have, you can take more money out under the form of a dividend and less anticipating in the form of work, for instance. It depends. So do you have flexibility? What is your job description if you cannot avoid taking money out under the form of an employment? What do you do? Can I see the description? Does it fit a high value added activity or not? But even if the agreement doesn't say so, what do you actually do is something that we can just see if the wording matches because your actual function is like this. So something like that. Then what I'm always looking for is offshore, huge problem. Always CFC legislation.
Yep.
You have low tax jurisdictions, even if they're not tax havens. Control. How much what is the threshold of your holding? Can you dispose of it? Are you willing to? But you have to transfer it. But sometimes, let's say, if you transfer 1%, I'm not suggesting using a fiduciary person or just give it away to sell to your wife. But maybe if you just sell 2% of your shares, then you won't qualify for CFC rules, and that's something which is interesting. Yep. What are the rules? I mean, sometimes with pension income, as we were discussing, well, it's a lump. I want to take it all under the form of a lump sum. Well, maybe you should do it before you come to Portugal and become resident, because the tax regime in your country of departure is very friendly for that. But if you're paying regularly under the form of a rent, well, maybe the 10%, it's nice. And generally, there is a financial element to consider. When you withdraw everything, you get immediately more money. But then, if you live past a certain age, you will be better off with the rent. So, I mean, every case is different. But what's like first things I'm looking for is tax havens, funny structures, shelf companies, something which is empty. There is no economic rationale. There is no substance. These are the things that a tax haven in a place where actually have activity and the company is going for a number of years is completely different than an offshore company set up 1 month prior to arriving to Portugal, or even an onshore company used to requalify capital put together before coming to Portugal. That may be a no-no. I mean, so it depends. Various traps that we need to anticipate.
Fantastic. Thank you.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.